And now at 30 minutes to 7, economists are urging more African countries to establish domestic processing plants for natural resources such as lithium, enabling the continent to capture a greater share of the value generated from its mineral wealth. They argue that local processing would create skilled jobs, accelerate industrialization, and strengthen Africa's position in the fast growing global battery and electric vehicle industries. The call follows Zimbabwe's recent commissioning of its first lithium processing plant, a milestone that reinforces its status as Africa's leading lithium producer. To help us unpack this, we joined by mining analyst Peter Major. Peter, very good morning to you, and thank you so much for speaking to us. Perhaps let's start with the Zimbabwean story. What has it done right, and what is in the pipeline for us to be convinced that this is a success story that many African countries ought to, duplicate or even just follow?
Look, without a doubt, the more processing you can do in your own country, the more you keep in the dollars or the foreign exchange, the more jobs you create, the more dependency your customers have on you. And so that's what you want to ensure. So what China did was not new. What China did is what was practiced by many countries for thousands of years. But they had a real determination to become the dominant supplier of as many goods, minerals, and eventually they're going to do the same with services. So they took an existing model that's worked very well for thousands of years, and they didn't lose focus, and they gave it great support. Now, Zimbabwe, like South Africa, they used to be mining giants. Maybe Zimbabwe compared to South Africa wasn't such a giant, but Zimbabwe had all the minerals South Africa did. It didn't have a very large population. It had quite well developed mining companies that took the resources to higher levels. They kept as much in the country as they could. Zambia even had precious metal refineries to take out the gold, the PGMs, the silver from the copper they produced. But we all know what happened is a lot of those countries, all of them in the end, nationalized their assets. The refining bit wasn't sustainable because of electricity problems, because of skills problems, because of a fall in commodity prices and failure to put money back into the company. A lot of money was extracted from the mining companies. All right, no more about history. Yes, it's very good to do it, but if you're going to require companies to do it, you can't ask people to do something that's not possible. And we see a lot of that happening in Africa, especially South Africa, that at one time companies refined to the maximum economic level possible because a company wants to keep as much of the mineral revenue in itself. They want to keep as much of the profit in itself. They want their employees to develop, and they want their customers to be more and more dependent on them. So I'm quite impressed with Zimbabwe because it was a big demand. They have very erratic electricity. It's not the cheapest electricity. They don't have a great infrastructure like they used to. And we know companies always balk when you say you must go to the next level, invest all this capital to now refine your product instead of take it out at a very low rate. And yet they were able to get the Chinese to do this. Why? Because Zimbabwe has great lithium resources and reserves. And I think the important part is they got the Chinese to invest hundreds of millions of dollars into the mine. And when someone has invested hundreds of millions of dollars into a mine and they see a long term future, they see a long term return on investment, they don't want someone canceling their mining license or restricting their mining license or giving them a hard time. So they did have China over a barrel, and China's agreed to do this. and it is great for Zimbabwe. It's very good, and it set a good precedent. But you have to know how hard to push someone before you just make demands and find out they can't comply with your demand. And now you've limited other investment because they also can't comply, so they won't even bother investing in the mine. So it's a
Now, I'd
very fine
imagine
line.
that there are also different situations in different countries, so you can't necessarily supplant what happened in Zimbabwe if you are looking for greater value in terms of the wealth creation. So, I understand that some of the highest margins also come from. Technology, intellectual property, and cell manufacturing and advanced engineering, if you are trying to get the battery economy to move up a step. So, is this something that other countries should be looking at long term?
Yes, they should be looking at it short term, medium term, and long term. They should be looking at it and studying it really seriously and seeing what do they have to do to change so that more companies will do that. And it might take a little government persuasion, coercion, but you have to listen to the company's excuse. If they don't want to do it, you have to listen to why. And if a company says, look, I will do it, but here's the assistance I need, you have to be able to determine is that a reasonable request or is it unreasonable? Can I assist in that or can't I? But yes, all countries should be studying how to do this.
And just is beneficiation a sufficient condition for industrialization or just merely a necessary one? Because, as you mentioned, China's excuse was that, look, it dominates the refining uh, course, so why not continue?
You've raised a really good point. Yes, does taking it up the refining curve lead to further industrialization? Not necessarily. Uh, you have to have all your surrounding environment capable of doing that. And China is so far ahead in battery technology. Let's use America as an example. Even if America can mine rare earths, can mine lithium, even if they can refine it, if they can't convert it into a battery economically, then there is no battery industry in America. And if they want to build a battery industry, they've got to ask, well, who's going to put the money in? Because probably the auto manufacturers are going to say, geez, we think we can put in a lot of money, and yet we're so far behind the battery curve, it will be wasted. The Chinese batteries will be racing ahead of us faster. So let's go back to Zimbabwe. Should they be putting in a battery factory? Should they be asking the Chinese company that's mining and now refining lithium to a higher level, should they ask them to put in a battery plant? Probably not, because then you have to transport the batteries to where? The biggest markets? Asia, America, Europe. Does Zimbabwe have the infrastructure to transport? Do they have a railway? Do they have airlines? Do they have roads that can handle the transportation? So it's worth looking at it, but you can't just put a blanket statement saying, yeah, this is going to lead to better industrialization in our country. And pretty soon we'll be a battery producer and then we'll be a electric car producer. And oh boy, then we'll compete head on with America and China.
And
Not going to
as
happen.
you're speaking about America and China, I'm wondering about Australia. I mean, they're a major lithium producer. Why are they still struggling to be competitive in the global, battery industry?
Boy, the billions that China invests into battery technology. And if we can jump to rare earth, I know someone that was trying for decades, 2 decades, to get someone to mine his rare earth deposit in South Africa. And he was spending all his time going to Germany because they were leading edge rare earths. They knew more about rare earths than anyone. And after 15 years, he went to China and he came back and told me, Peter, I've been wasting my time in Germany. There is a building with 1,000 PhDs I went to in China, 1,000 PhDs who just do rare earths. Can you believe it? I doubt the rest of the world has 1,000 PhDs who could do rare earths. And here China had them in one building. And so that's the kind of mind boggling scale China puts when they want to do something, when they want to be world leaders, that's how far they're willing to go. So their education system takes priority, is geared to that. Are are African countries gearing their education to that, or are we falling further behind? It starts with education. It starts with appropriate government policy.
In Southern Africa, just so that, as you mentioned, partnership is great, given that China is, one of the biggest, if not the biggest investors. So for Southern Africa, it possesses lithium, manganese, platinum, nickel, graphite, and rare earths. So where does the real opportunity lie if we're going beyond the beneficiation in the lithium industry, or just the value chain? What should we be looking to do at this moment, especially being a price taker and the global player in electric vehicles, for instance?
I don't think we can go much further than the advanced refining that the Chinese are now doing in Zimbabwe. I think to go to another level, they're going to balk, they're going to drag their feet. And I think because Zimbabwe has such large lithium deposits, if they keep their policy relatively attractive, they can open up many more lithium mines that'll employ a lot more people than some kind of high level advancement from the current refining they're doing. So it's about, you want you want to create as many jobs as possible. And if you can create a lot more jobs, attracting investment in your mines, then stipulating we're only going to let you invest in a mine here if you agree to take it way up the refining curve, and then you take it up into battery making curve. If you know what I mean, you don't want to sacrifice another potential 5, 10, 20,000 jobs on the mining side, and you might come up with another 200, 300, 400 jobs on the high end IT, um, further beneficiation side. You got to weigh that up. You want your policies to create maximum amount of jobs as soon as possible. And you can imagine if Zimbabwe gets up to 15, 20% of world lithium production, holy moly. Now they can start turning up the heat. They can start turning the screws and saying, all right, we want a little more beneficiation. We want to retain a little more of that profit here. Now you can do it because you've got clout. So that's that's um that's a wise policy rather than starting with hard term conditions like South Africa has. They can't even get anybody to open up a gold mine because they came up with so many demands that they closed down the majority of gold mines and chased off those investors, and they prevented new investors from coming in because they just have too many outrageous demands at the start. Wait till the production gets really large and you've got billions invested in your country. Now you've got leverage to increase the demands or requests. Let's not call them demands. I don't like that word. Let's call them requests, suggestions, attractive further options, not demands.
All right, Peter Major, thank you so much for speaking to us, mining analyst Peter Major. And that brings the time to 7 o'clock.
The sound of Africa, starting strong. Rise and shine with Peter Ndoro and Sipiso Makwetla on the Channel Africa app and SABC Plus.
And we start off at the news desk with Jwalani Tulo Ngwepe for a news bulletin.